everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today we're taking a look at the ZF. Now, if you're not familiar with the ZF, this is one of the only cheaper options when it comes to interest rates. This is the 5-year notes. Now, the 5-year notes overall tend to be a little bit more volatile than, let's say, the 10-year notes, but they tick much cheaper. It's a lot easier to sustain for smaller accounts because it's only like $7 and some odd number change per tick. So it's a little bit easier to manage on smaller accounts who maybe still want to trade the interest rates. Now, the overall movement that we have here, yesterday had a nice bull trend to it, grinding higher. We found a higher low, and that continued up until the end of the day, where we got a little bit range bound. We open up inside yesterday's price with a big gap down, but nothing really changed. We're still kind of range bound with a slight bullish bias. So we come down to yesterday's low, and we find a big amount of support coming off of that level. But before we get to that point, it's kind of interesting because we had a little bit of a drive higher. We start the day off with a bear candle, then we go strong bull, and then no follow through, right? Little doji, strong bull show back up, and then they can't even trigger above themselves before we start running out of steam. Now up here, it does kind of look like we're getting a little bit of a kind of a flat bottomed wedge. And when we're looking inside of this area here, given the context, we're in the range, we're sort of in the middle of the range, and we're nearing that area of resistance from before. The support and resistance level coming in at 118.265 is showing that, well, the market's having a hard time there, and they may be kind of front-running it a little bit. We can see that there is absolutely no value interest in this, and the force has tried several times. They tried to break out, they failed. They try to break out, and they fail. So with that continued failure in the lack of value, we're getting an idea that, well, the market is pretty bearish. The buyers just aren't getting anywhere, and maybe we're going to cycle down to the lows of yesterday. So a nice little selling opportunity on a little tiny bear bar to allow the overall move to happen. Now, they dove lower, they slammed through the bottom and break down quite aggressively. Now, with this aggressive breakdown compared to what we've seen before, you got to be careful. You don't want to jump in too soon, but you also don't want to miss the move. So we push down into yesterday's low. We also test weekly support at 118. What is that? These decimals are killing me. These the 118.220 area, and we find some bouncing there. Now, this happened on a huge value spike down. Absolutely no force in the move, meaning that the sellers didn't believe it at all, and that allowed for a counter trend move, knowing that this is likely going to turn into a range. We're in major support from yesterday. We have every reason to believe that we're going to get a counter scalp back to the opposite direction. Nice little counter scalp back in the upside move. We hit the moving average and we stall out for a little while. They do pull back and they find that prior low of day once again. You'll notice that huge bear bar. No follow through, right? As soon as it ticks down to trigger in the sellers, it immediately pops back up, and we find a little flat bottom burst in action right here with a good clue that this is probably the low of the range, and we're looking to fade the lows of the range back up towards a high. So a beautiful overall move today with all of the markets just kind of range bound really slow. You had to play it safe today, but as long as you did, you had some pretty good overall movement. And, well, the ZF, if you are interested in slightly cheaper alternatives when it comes to interest rates, could be a great market to keep your eyes on. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, maybe a little bit useful, and maybe a little entertaining. And we'll see you next time.